All right, welcome everyone. It is yours truly, David Morgan of themorganreport.com with Lynette Zang. And Lynette, it is good to have you back. It has been some time, and I know you do a lot of interviews, so thank you for making the time for me. And we have a lot in common. I think we think quite a bit alike, but there's always, we can split hairs or not. I think that you wrote me a little bit about, what you were thinking about with growing volatility across global markets, continued central bank accumulation, rising sovereign debt concerns, and increasing pressure on the fiat monetary system. We believe this would be an especially timely uh, conversation for your audience. I couldn't agree more. So let me hand it over to you and just dig in, start in wherever you want, and then we'll just keep going.
That's a pretty tall order. But I mean, there's so much that is really going on. But that is very typical of a transition from one monetary system to another monetary system. And all of that feedback, this is what I find like super interesting. You look at the massive run up in the spot gold contracts and the spot silver contracts, which really just became a trading tool for traders, where they sent it up not over valued, but to overbought positions. I think you might know this. I could be off a little bit, but wasn't silver something like 80 or 90% above that 200-day moving average?
I don't remember percentage, but it was so significant. And, I tried to tell people, I did tell people, whether they took it or not. So I don't care if it's soybean oil, silver, or NVIDIA stock. When you see a parabolic move like that, you better be careful. You better look out.
Mhm.
This thing is overbought. As much as I love silver, all markets can be overbought at times. And yeah, whether it's percentage you cited or not, I do not know. What I do know was I gave a fair warning to my both paid
Mhm.
and public and said, look, let's not get too greedy here. We actually said some partial profits, and I'm not
Mhm.
opposed. And, going back and trying not to make this about me, but about markets and being adept at markets, one of the better known commentators said, what I like about you is you're willing to say, take a profit and markets move both up and down, no matter how much we love them. So, yeah, back
Mhm.
to you. But I agree. It just, and now let's press on. I'll give it back to you. Lynette, go ahead.
Well, even kind of staying on that because there's such an interesting phenomenon. The last time, that 200-day moving average for people, if you're 10% above or below that, technically, that's a lot. So it was either 80 or 90% above that 200-day moving average. If 10%'s a lot, what's 90%, right? Or 80%. And so we all know as technicians, people love it when things do go parabolic and they keep going up and they think that's a great thing. But like you, I like warned people, I know this is fun, but you need to understand this is speculation. So now in this pullback that we have experienced and the volatility and all of that, people go, oh, gold, oh, silver, oh. First of all, the spot markets are contracts for trading. But second of all they've really been doing is working off an overbought position. Because I think when I checked on silver the last time, and it could be different now, but I think it was like 18% above, which is still extreme. And but gold was more in line. That was maybe 4 or 5%. So that's happening there. But at the same time, and the public watching the spot markets at the same time, when you look at the reserves that the Comex has for delivery, what you see is consistent fat fingers actually taking delivery. So I'm thinking, and I could be wrong, this is just my opinion, but I'm thinking that part of that volatility is to cover up the physical delivery out that's actually taking place because the public doesn't look there. They look at the spot market. Does that make sense to you?
It does. I mean, there's a little nuance in there that
Oh,
seems to
yeah.
be misunderstood. And I've talked about it, written about it, done slides on it. But first of all, it's kind of a logic problem. So if most of the community thinks that the big banks, the bullion banks, have pretty much controlled this market through the derivative process of the futures forever or close to it.
Well,
And
since
then
the
we get to the
70s.
end of the month and it's, first delivery notice. All of a sudden, it's all those banks that are in there controlling everything to the minute, being facetious to make my point, but they are going to be overtaken by some external force outside of the community that's going to take all this metal off the exchange and crash the Comex. It's illogical if it's the same entities controlling the paper market and they control it from month to month, from delivery month to delivery month, deliver on non-delivery months, which are legal. Why would they all of a sudden be in bad shape? So that to me is a logic question. They know what they're doing, they know what they're doing, but right now they don't know what they're doing. They're going to get creamed. So that's point number one. Point number two is what these people don't seem to understand is that most of those deliveries are just a paper tagging process.
Most of them are.
Yeah, almost all of them. And yet, the Comex is being drained. Well, I don't know if you know this, Lynette, or not, but Ted Butler, not the late, great Ted Butler we all know and honor, but my Ted Butler, I'll call him mine from he's part of the Morgan Report team. He's from the UK, very bright young man. And he writes the silver section, Foreign Gold We Trust. This is Ronnie Stoffele's publication that's very, very highly valued by the community. And so Ted does that section pretty much on his own. I mean, he might consult me a little bit, but it's not about me. It's about this publication. And in it this year, he shows the basic amount of Comex, LBMA, and Shanghai physical metal on the exchange. It's not a steady level, but it almost is. And what happens is all these deliveries is HSBC delivers to JPM and JPM delivers to Scotia when they're around. And so this metal stays on the shelf, has not budged, but it's been quote unquote delivered. And by the legal definition, it has been delivered. And the tag comes off, it says HSBC, and JP Morgan goes on those 4 pallets.
Well, let me ask you a question about that then, because that's not what I'm seeing when I go into the Comex as a straight line. I'm actually seeing the store of the gold and silver that they have declining like weekly. I'd have to go back and look and see exactly when that started. But if it was just a paper transaction where it changed from one hand into another hand, would that make the availability look like it was going down?
No, I mean, what we really want to focus on is what you just said. We want to see the Comex drain, basically, because if that happens and it's the pile of silver of last resort, then we're going to get true price discovery, which is what we saw at the end of 2025 into the parabolic move of January. But on aggregate, it ebbs and flows. It does go up and down and up and down. But the amount of silver that came in physically into the Comex during the tariff scare, at least most of us think that was the reason from the LBMA, that was a record high of physical silver in the Comex for like the decade. And then that big amount that came in during those few months exited more quickly than it entered. And most of us believe, went to Shanghai. Not all of it. But yeah, you're right. But the main one to focus on is registered. That's what the dealers actually have. And we're probably at 77 million. Last time I checked was about a week ago. It's a different number, but it's probably close to that still. And I've seen it down as low as 35 to 30 million for quite some time. And there was still no default or whatever. But no, it's very important to see, what the total amount of silver in the Comex is. But as far as it being drained, really it hasn't been. I mean, has come off, yes, but you've got to remember some silver goes back on. And one thing no one's talking about, and it doesn't make me, I would say happy, but we've got to consider the facts. And the facts are a lot of retail sold back when we got above 50. And a lot of that inventory is in refiners right now. It's
Hmm.
backlog that will be turned into commercial bars. Well, let's say the silver market's as weak in the retail side as it is right now. Those bars get sold no matter what the price, because that's how the spot
Right.
market works. So the
Hmm.
bullion banks may be loading up on $72 silver as an example. Or let's go to the 200-day moving average. What would that be? 66? Is that right? Something like that?
Yeah, I'd have to pull it up and
So
look
let's
right
just
now.
make up a number. Let's just say
Okay.
70. Well, all of a sudden, there's all this 1,000 ounce bars that, industry doesn't need because they bought enough during the run up. They got a 2 year stockpile, whatever the case may be. I don't want to go too far of hypotheticals, but the market itself determines I don't need it. Well, someone buys it. Who's that? The bullion banks. At what price? Current price. What's that? $70 for this thought experiment. And what do they do with it? Well, they have to pile it up somewhere, and usually that's in the Comex. So you could see an inventory build over the next 6 months or so based on retail sales. These wholesalers are flush with metal. You're in the business.
Hmm. Hmm.
Wholesalers will sell to some retailers at a discount. That's very rare. So I'm
Right.
not trying to build a negative case. I always try to be objective. You should own metal. If you don't own it now, buy it. But the point is that these nuances that the COMEX is being drained isn't really true yet. Could it be? Certainly. But the way it's set up is the boys that run it all the way through day to day, month to month, week to week,
Hmm.
I take
Yeah.
more or less. There are occasions where, as we saw in January, where somebody in China is running that market really high. What happened with that guy? Well, he had a lot of contracts he offed, and the market came crashing down from 121 to 65. I mean, that's how silver can move, as we both know. Anyway, let me move on a little bit from what the notes you sent me. Central banks are buying gold, some of the fastest rates in history. They're effectively voting against reserve assets that are commonly considered safe, which is, of course, U.S. Treasuries. Central banks continue accumulating gold, but most financial advisors still recommend almost none. I mean, the people who print the money are buying gold. That should tell us everything. What say you?
Oh, 100%. I mean, look at does any, I say government, but the reality is that it's the corporations that are running everything. So do the corporations want to give up their money monopoly? No. I think that they are setting things up for this transition into the new digital system. But in order to do that, I mean, really what it is when one system dies, another one's born. But you've got gold and silver as a bridge. So when you're seeing these global central banks loading up on gold as the primary currency metal, it's because who knows more about what they're doing with this stuff than the central banks? And, quite honestly, there's been something really interesting, and I've not seen this before, but at the Federal Reserve Education Department on the purchasing power chart, which they publish, anybody can go into the FRED, FRED, and officially it's been 3 cents worth of purchasing power out of the original dollar's worth. But this most recent post, it kind of depends on the day that you go in there, where it broke that 3 cents to go to 2.9 cents, or it's at 3 cents. I've never actually seen it go back and forth like this, because usually they post it and then there's a schedule for when they're going to post it the next time. And it does go back and forth. I can't tell you what that means. I've never quite noticed that before. But what I can tell you is that clearly the guys that are doing the damage understand what they're doing. And what are they doing? They're flying to sound money that they know they can't inflate away, because whoever holds the gold, whoever holds the silver on the other side of this mess holds their freedom and their power and their choices. And that's really what's at stake.
Absolutely. I mean, freedom, I think, is my core principle. I mean, so just say, well, you're a silver expert, whatever. No, it's about freedom because I've said many times you could have a stack of gold and silver that are astronomical, but if you lost your freedom, how much gold you have doesn't really matter at that point.
That would be true.
So
And that's also why, I encourage both local as well as global community, because to your point, you cannot eat gold or silver, but food becomes the biggest issue for people as we go through this. Now, anything physical or any talent you have is certainly barterable, but silver for me is my barterable choice because it's universal. And if I have strawberries, which I do, I have strawberries, but they have a shelf life. Silver doesn't have a shelf life. And I have it in a whole bunch of different forms. This happens to be some sterling silver, flatware, whatever it is, because gold and silver at their base are monetary. But silver to me is like the canary in the coal mine and the level of volatility, because even though there could be a lot of silver stockpiled right now because of all that came out of the closets when the spot price rose, the demand for physical silver is also enormous. And I'm pretty sure that if they needed the silver as they're building out all of their data centers, these tech companies, I would not be surprised if it's not some of these tech companies that are actually taking the physical silver off of this market. And, again, I mean, you always have to look beneath the surface. If all you look at the surface, then you see what they want to see. But quite honestly, when you see what's happening for all natural resources, personally, I believe that we are transitioning away from those paper markets into a market that's actually going to matter again, the physical supply and demand. And, wouldn't it be great if the bullion banks lost all of their power to manipulate?
I think it's inevitable. I mean, every fiat currency eventually reaches a point where confidence becomes more important than policy.
How
And
close do you think we are to that
I was going to
complete
ask you
loss of
that. I mean,
confidence?
one of my bullet points to ask you is at what point does debt become mathematically unserviceable without a monetary reset? Honestly, Annette, I'll be truthful. I have said 2 years for 5 years. I mean, I have, but
Hmm.
I'll stand by that. I really doubt we'll make it to 2030 without some kind of major change, whether we have a gold tie or a digital only or some combination therein. I'm not sure. What I am sure, I should say confident because I'm not certain that
Right.
we'll have some type of reset. I mean, the issue isn't whether fiat fails tomorrow, it's whether purchasing power continues to erode for the average American to say, I've had it. The old
Exactly.
Dublin film, I'm mad as hell. I'm not going to take it anymore. I'm not going to that store and spending this cash. I'm going to take whatever I can borrow and buy peanut butter and tuna fish because I'm sick of having it go up 30% every time I set foot in the store. And that's, what von Mises calls the crack up boom. And that's a psychological event. Monetarily, we've passed that point a long time ago. It just
Right.
hasn't hit the psychology of the average American to say, I can't afford $6 gas and steak at $40 a pound. What are you doing to me? I'm working two jobs. I mean, I feel for these people. I mean, your labor has been robbed by this system. You have been extorted by a system that cares nothing about you and everything about their greed. And they're so incompetent that they can keep this running the system ad infinitum, and they can't. And some know that. I mean, the upper echelon knows this
Hmm.
stuff.
You totally do.
But I don't know. I got on a rant yesterday because my blood pressure just keeps going up because you and I and others have tried for so long to speak the truth and give a clear, concise, succinct view of what happens. Don't save in currency, save in money. And here we are. And a lot of people wish they would have listened to us, but so many hear it and don't understand it or don't take action.
Right. And so I get how frustrating that could be. But I will say, can I ask you what birth order you were in your family?
I was first.
That's the difference. I was last. I'm the youngest of seven. I'm so used to people ignoring what I say and discounting it that's like water off of a duck's back for me. It just doesn't matter because I'm used to it. Firstborn probably are not as used to that, because I'll never give up. And when somebody doesn't understand what I'm trying to show them, then I own that and I go, okay, how can I do it different? And this is what I came up with. Okay. I lift weights and I have for many years. And my trainer is an attorney turned gym rat. And his undergraduate major was in history. So he's a pretty bright guy. And one day, not that long ago, we were having a conversation, and I happened to mention that silver was actually our currency prior to 1965. And
Exactly.
he's in his mid 40s. He's somewhere. And he said, "It was?" And I was shocked that he, of all people, did not know this, considering his education in history, and he's a critical thinker. And so what we came up with is it says have a paradigm shift. And on this side, we have a pre 64 silver dime. And on the other side, we have a new dime, because we know, you and I know, that not all dimes are created equal. And I'll send you some of these too. And on the day that we happened to buy this dime, which was on February 27th of 2026, that one dime cost us $6.72, the silver dime. And, we show them the ridge. What can you buy with that other dime? Nothing. And so educating them, but I realized that I'm asking people to understand and believe in sound money when most of the people that I'm talking to have never even held it in their hand.
Sure.
So I go around the world and we've got more information on it. We've got little under 5 minute, under 2 minute videos because you can usually get somebody to sit for under 5 minutes. You're not going to get them to sit for 2 hours, but maybe 5 minutes, right?
Right.
So what we're really trying to do is build an army on a global basis, because I believe, and this could be crazy, but doesn't matter, water off a duck's back. But I believe that if we can get 3% of the global population to convert their garbage fiat while it can still buy gold and silver, I think we've got a shot at getting redeemable gold back in the system again, even if it is a digital system. It doesn't matter. It can be a digital system. It doesn't have to be one-to-one back. You can keep the rest of the garbage. Send me my gold. I think this is a time for the public to take their power back, but this is one. We've got so many things that we're doing for educating, and I love a table of parents or grandparents, whatever, with kids that are about 7, 8, 9, 10 years old, and I'll just walk up to them and say, "Can I give your kids a gift?" And then just do this little 30-second elevator pitch. Their eyes get like saucers. The kids think this is the coolest thing because kids love coins, right? But the parents are like, "Oh my God." And the grandparents go, "Oh, yes, I remember that." So I think a lot of our job is helping the people that didn't have it in history understand that it was there. And where I can't buy a cup of coffee with this dime, or a cheap meal with this dime, and inexpensive, I could still buy that with this dime.
Yeah, I love it.
That's sound money. You can steal it. We'll send you some, because we've got to build an army. There's only so much you can do. There's only so much I can do, and all the other people that are in this space. We need the individuals to go out there. And we actually give each client They can have the first one for free, and then the rest of them are just at our cost. We don't even want to make a penny on them. We want people out there to distribute them
I
and
was on a
and teach
I was
them.
on a real estate show recently, and she was asking me, about sound money and gold and silver. I said, look, when I was a teenager, I bought fuel. Of course, it was, what was I? We've been off the silver standard or silver coinage because it's past 65, but not much past it. Point being is gasoline was 25 cents a gallon.
I
Now,
remember that.
time buys a gallon of gas, at least in Arizona and Washington, where I'm at. So the point being is it maintained its purchasing power, as you just said. I'm just giving another example of that. I mean, I want to make sure that people understand where you and I are coming from. I don't want to speak for back, but preparedness isn't fear. And diversification is the best thing you can do to mitigate risk. Holding some physical and gold is no different than holding insurance or some kind of well-being that you can trust through thick, thin, in any circumstance.
Although there is one difference, if I could interrupt you
Sure.
before you go on.
Please.
When you spend that money on that life insurance or medical insurance or whatever kind of house insurance, that money's gone. When you spend it on wealth insurance, you always have it. It doesn't leave you.
Well said.
That's a big difference.
It is. Thank you for that. And financial preparedness can include reducing your debt, living within your means, maintaining liquidity, having some cash, even some fiat. If the ATMs go down, you have,
That's it.
pictures of presidents with on green pieces of paper. It could come in very handy. Develop your own skills. Believe in yourself. You can invest in yourself and owning tangible assets. So someone woke up tomorrow and realized they had 100% exposure to the fiat financial system because they're diversified in 4 different ETFs: a real estate ETF, a resource ETF, S&P 500 ETF, and a emerging markets ETF. I'm diversified across the board. And of course, we both know they're not. What would be the first steps that they should take from Lynette Zang?
Well, I think that they should call us. We do a sound money strategy, and you want to make sure that you can sustain your current standard of living. So to your earlier point, that's the major instantly liquid part. So that would definitely include some cash, even though it's going away. It doesn't matter. That's the most recognizable. It could even include, that part could even include some gold backs. We need, adoption and acceptance of it, but that is cash form. And then that's where, for me, that's where the silver comes in after that. And the gold, maybe even some digital gold that's redeemable, like Kinesis or Glint or something like that, because I know those two happen to be redeemable. And then beyond that, you want to be properly diversified, because to your point, if you can only convert it into this garbage, then that goes to zero. What have you got? You got a $10 trillion Zimbabwe note that you can't buy anything with, right? So you want to make sure that you have proper diversification, intangible versus tangible assets that you hold. And then you want to get into a position to take advantage of the change, because there's always opportunity in change. And that, for me, that's where the gold comes in, because right now, all of those assets and instruments that they have targeted for reflation, because market's going up, even no matter what the market is, when it goes up, it gets attention and people think, oh, that's a good thing. But when you look at it after inflation, the only thing that really carries you is primarily gold, and then secondarily silver when you're looking at that whole inflation piece. So you want to be in a position to take advantage of what's happening, because we can't stop it. We just want to live comfortably through it. So sustain a reasonable standard of living. Make sure that whatever fiat money wealth you've accumulated, if that goes to zero, that's okay. You're properly diversified, and you're in the right place at the right time with the right asset. So when this whole thing flip-flops, gold and silver undervalued, all that other stuff overvalued, that's going to flip-flop. And you want to have the ability to hold your purchasing power so you can convert some of this into these income producing assets that you can't outlive when they are undervalued.
Exactly. I am at a hard stop, so I'm going to pretty much mark it here. This has been a great conversation. It's been mainly about trust. Every monetary system ultimately rests on confidence.
Mm-hmm.
The question investors really need to ask today is not whether gold goes higher, peaks out within a year or two, but whether confidence in the current system will be higher or lower a few years from now.
Good point.
The answer to that question will determine whether you take action or not. Lynette, how do people get a hold of you if they want to learn more?
Wow. Well, I'm all over the place. You can follow me on X at the Lynette Zang and all other channels. So YouTube, LinkedIn, Facebook, Instagram, TikTok at Zang, INTL, Zang International. And, and plus I'm all over the place. I'm easy to find.
You are easy to find. All right. Well, thank you so much for your time.
Well, it's been
It
great.
really was a pleasure, and we will have to do it again soon. And then we cover some topics that aren't covered all that often. And also, I think we took a little bit of different perspective on the trust and confidence issue, because that's what it boils down to.
It
And
is.
freedom. I mean, freedom. And one last comment. It doesn't take a majority. I totally agree. When you said it, it hit me hard. 2 or 3% is all it takes. Doesn't take it. And that amount would, I really believe, because that's Revolutionary War was about that amount.
Exactly.
Thank you.
That's where I got that number, David. That's where I got that number. Mm-hmm.
Excellent. I know you're well studied. Real pleasure. We will call it
Always.
quits for now, but I'll have you back hopefully fairly soon.
I look forward to it.